Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, it is Thursday, day after Federal Reserve meeting yesterday. Quite a ride, man. I was so busy yesterday. So much stuff happened. But I think that we're ready to come in and look at this market and see what happens. Right at the beginning here, I mean, it's still a pretty tight range like it has been in past days, but there is a little bit more level 2 activity going on right now. So we might get a trade. We'll see. And there was some stuff overnight here. So you can see here's the Federal Reserve meeting, but in the overnight action, they pushed up and they moved well above the highs from the Federal Reserve meeting. And the market's take seems to be overall dovish, even though, in my opinion, it was a kind of another nothing burger wait and see sort of a meeting. Coming over here to the S&P 500, the S&P 500 really took off of the initial announcement and everything, and they are up into new highs and above 5,300, which is quite amazing. The equity market just seems like bonkers. Oil, on the other hand, not quite getting up there. Gold and silver, though, wow. Like look at gold. Okay, so there is this concern that inflation doesn't come back down. And the market seems to be saying to me that they don't think that the Federal Reserve is going to get ahead of it. So if inflation does come back, the only trade is gold and silver and not short treasuries. Hence, you see gold breaking out there above 2,200. I was seeing some threads, some people asking, will it get to 3,000? Well, the way that things are going right now, I think that's a very realistic target. Copper also struggling. So kind of seeing some weakness in China again this morning. And then we got the Japanese yen. Well, Japanese yen, up and down. I don't know if I can make too much of that, but you can see that the Federal Reserve meeting result did hammer the dollar quite a bit. It's only back to 103, so that's not like the end of the world or anything, but that did cause some selling flows. And you can also see in Bitcoin. Bitcoin was kind of in the doldrums, was starting to look a little bit weak, and then it came out there. And the big thing that I kind of came out with yesterday, and I did look a little bit at it after the stream, but mostly looking at the balance sheet of MSTR during stream and so on and so forth, is that Bitcoin is actually not in the clear yet. So it seems like it's been on a great run. Everybody's really interested in it, but it would only need to drop about 10,000, which is a pretty average decline in Bitcoin, for them to get into dangerous levels where certain players start to have problems again. So, but Federal Reserve meeting was good for Bitcoin, and that's where we're at this morning. Okay, so I can see here already, there was a little bit, while we were talking, a little bit of a sell here in the Treasuries. That's curious. Oh, and we did have some news too, didn't we? I talked through the news. I forgot to turn my news squawk on.
2, 3, 9.
Okay, so the Philly Fed Business Index was 3.2 versus an expected -2.5, and then U.S. initial jobless claims was 210 versus an expected 213. So both of those numbers better than expected, and a small but reasonable decline there in the Treasuries. That makes sense. So one of the difficulties that I think we're going to have, I should say hi, Alan, Paul, Max, Rob, Uzi. Max, that is a new name. Welcome to the stream. I'm glad to see, like, when there's a new name that they're right at the beginning. That's encouraging. That means maybe you're serious. All right. One of the problems that I see for us in the treasury markets right now is that the treasury market seems fairly priced to me. If I come back to the chart here and go to like the daily chart, okay? When we were up here, that was a little crazy. And I know that seems like that's a really tight range, but that's just kind of where we're at up here. And they were saying like, oh, they're going to cut interest rates 6 times in 2024. No, that was stupid. That was crazy. They did come back down. Now that they're saying 3, look, the Federal Reserve expects 3, the market expects 3, the pricing all seems right. So now it kind of comes down to there has to be some sort of change, right? Like we have to come in and start seeing CPIs that are higher than what they're supposed to be, for instance. Otherwise, current prices are good. So is there information that we might know that could potentially predict that future economic data and thus the future flows? Well, potentially. But that one's a very difficult game to get right. But a couple of things that I am watching, okay? One thing that I think kind of suggests that the Federal Reserve will need to cut interest rates, just as planned, is that the job market is not as strong as it appears. We have seen a couple of things showing that the job market has been getting weaker. And some industries, particularly tech, are actually quite rough right now. Okay, so if they don't cut interest rates, yeah, you could start to get some deflation. I also suspect, I don't have a whole lot of evidence to support this theory yet, but I suspect that we are starting to get disinflationary generational factors coming into play here again. Perhaps AI, for instance. AI would be a disinflationary force that we would have to contend with, right? Now, on the split side, I think that there's considerable evidence to suggest that it will be very, very difficult to get back to 3% inflation. I think that the Federal Reserve is kind of acting on this theory, or not theory, but how do I say this inclination to believe that the trends will continue and that inflation will continue to just drop back to 2%. That like all of the inflation that we saw was kind of an aberration, and that aberration is gone, and so it should very easily come back to 2%. I personally, I don't think that that's what's going to happen. So I guess if I was going to make a bet, and I think that this is like a really, really big bet, like really me going with my gut and not having a whole lot of hard evidence to go along with it, I think that my bet would be buying gold. Buying gold on the theory that we don't come back to 2% and that the Federal Reserve is not able to cut interest rates. And in that situation, the Federal Reserve might still cut interest rates. So I really think gold is where you want to be. But I don't know. Anytime that it seems like, you take the bet in gold, it doesn't work out. So that one's hyper speculative. I don't think that I'm going to be taking a position in that. There's somebody in Discord When we saw the Federal Reserve meeting, maybe I should go back and find the video. I could go back and find the video later, maybe. Because we recorded it. You can see it. But I don't know why he's so interested in that there was an iceberg, but... So they are coming down a little bit more. This is actually a little surprising to me. I kind of thought that there would maybe be some upside pressure, but like relatively gentle. The economic news that we got was negative. I don't know if it's negative to justify a drop much below where we are, though. So, but I'm starting to get some pretty negative flows here. There's been about 10,000 contracts have sold already. If that flow continues, that would be a pretty aggressive down move, and I am not quite sure. Well, there is definitely some strength coming into the dollar, and the Japanese yen is dropping here. What's with that? But there is volume in the Treasuries, so I don't think that it's necessarily just a correlation with the currencies. But the currencies are kind of following it, so that is something that we probably need to keep in mind here. You know, the other thing that we probably need to remember is that probably the big trade coming out of yesterday was that the longer term interest rates are staying higher. That the Federal Reserve does not expect to cut rates much beyond the 3 that they have planned for this year. And so that really hammered the ZB. Are we seeing that at the moment? No, spread did not change. So that cannot explain it either. So then my best guess is that there was some more volume that wanted to come in off of that economic data. And my second best guess is that there is some mean reversion pressure from yesterday. That, you know, we had a big update. They are okay with their take, and there's some profit taking and so forth. And that's kind of weighing on us a little bit. So here's an interesting tweet. This is from Caitlin Collins. I don't know who that is, but they're quoting a CNN article. Trump's team has sought out wealthy supporters and weighed what assets could be sold and fast. The presumptive GOP nominee himself has become increasingly concerned about the optics the March 25th deadline could present, especially the prospect that someone whose identity has long been tied to his wealth would confront financial crisis. Oh, they're saying Donald Trump's identity is very much tied to his wealth, and so a financial crisis could have negative optics in the public and hurt his support. So they want to get ahead of it. Well, that would maybe make sense. One of the things that I'm seeing going on with that, or that people have been speculating, is that he could get a bond or he could get assets, but he's pretending for the courts that he can't, to try and push back against the court. Because that happened, like in the Carroll case, there was some point where they had to put up a bond and they were like trying to argue against it after they had already secured the bond. So that's one thing that's going on. But the way that they phrased that kind of makes me wonder, oh, so you could go and find a billionaire like Elon Musk, and you could say, hey, Elon, I will sell you Trump Tower, New York, and this, and that in order to pay for the bond. And then, you know, after all of the legality and everything is done, later he would sell it back to Trump or something like that. Maybe. That, I think, is a curious story for the politics. I'm still really carefully watching this flow in the treasuries. There's still some selling coming through here. So far, the flows that we've gotten have been exactly the kind of move that I would like to be in on, but I'm not in on it because I wasn't able to predict that this flow was able to come in, nor am I able to, thus, I am not able to predict if there's going to be more of it, right? Like if I didn't see that there was going to be 10 to 15,000 contracts that were going to sell here, then why would I know that there's going to be 20 to 30,000 contracts that are going to sell here? So I can't really participate, but it's been a pretty steady sell here. My beard is getting into the slightly scraggly stage where it like starts to poke me and stuff. Driving me crazy here. $4K iceberg at 19. Well, I'm kind of scrolling around the web here now, but there's not a whole lot of activity this morning. Oh, there was Nick Timmeros an hour ago. Estimates of the long-run federal funds rate by FOMC participants June 2022 above 2.5 to officials at 2.57, below 2.58. I don't know why that what that means. He has a story on the Wall Street Journal, though, that I can't read. Warren tells Powell to slash interest rates to save green bubble. Good luck with that one. That's odd. I can't view Zero Hedge posts, but apparently I can see when people are retweeting Zero Hedge. Okay. Joseph Wang tweeted, global cutting cycle is starting. Crash up. Yeah. Let me peep your spread charts real quick. Just making sure that we have the same match. It is flattening a tiny bit, but nothing significant. Because yesterday the trade was the steepener. Now it's flattening back out. That's, I guess, mean reversion. I don't know. They sure have become stuck in the mud. Now this one is actually an interesting situation. I mean, I don't know if it really means anything, but we've been stuck here for a little while. So when you come back and you look at this, right? I'll make this a little bit bigger there. You can see there in the 10-year Treasury that we're just like stuck going sideways, right? What's with that? Well, that looks like a liquidity hole for sure. But when I come over here and I actually look at the DOM, I am not seeing that kind of like lack of latent liquidity. And instead, what I'm seeing is a ton of icebergs, both directions, and not enough market volume to fill those icebergs. So that's not something you see every day. So when I start seeing a bunch of icebergs like that, that makes me a little bit more cautious. That makes me a little bit more cautious because I can remember many, many days where, you know, I would see an iceberg and I was like, oh, that means that they're buying it and they're going to go up, and then it, like, nothing happens. It just gets stuck in the mud, right? So especially we're not really seeing the market orders come in super strong here. Like they came in for the sell, but then the market orders kind of disappeared, and these limit orders have just been dominating here as we just go sideways in this area. That's not really indicative of trending kind of action that I would like to see. And it can be very difficult to understand what those icebergs might be about. So I'm just going to be really cautious and kind of let it do its thing for here a little bit. Now, it may just stay in this area until just before the S&P 500 open. That would suck if that's what happens, but you know, that's kind of like the next like window for something to happen. Let's see here. Do I have something going on this morning? Oh, I do. I do have something that I would like to watch. So I will need to do that in 10 minutes. Actually, while I'm thinking about it, I should check my servers. Because we were having an interesting day yesterday. Nothing that I think my users would notice, but I do want to check it here. Okay. Ah. Okay. Well, it looks like I'm not going to be able to tell the thing that I want to see because they did a deployment last night and I have to see it. I have to see it having been gone for a certain amount of time to see what I want to see. So, oh well. But I will watch this a little meeting. I won't have to say anything, but I'll just be listening to it. You guys won't be able to hear it, but I might be a little bit quiet. The 5-year broke down there. Interesting. I'm really like when I look at it on ZBZF, like the spread ZBZF, the 5 and 30 spread, that is pretty dramatic change. In the 10 and 30, it's only just now becoming noticeable. 3 ticks. But it does appear to be coming out of the bottom of this. Not a ton of volume attending it, but I could be in that. Like again though, like the optimal trade here would have been, right, if I thought that there was going to be more selling coming through, to have caught it somewhere within that liquidity hole, like I would like to be above that liquidity hole if I could. So I don't know if right here is 17.5 is a very good position. Also, there's the 16. I'm not seeing liquidity there, but just remember that always weird things happen at 16, right? Weird things happen at 16. So there's this Twitter account called Unusual Whales, which I think was largely there to like tweet about like congressmen doing stock transactions and things like that. But they post some political things like polls and stuff that are at the very, it's kind of like, so this one, 7.6% of adults in the U.S. now identify as lesbian, gay, bisexual, transgender, or another sexual orientation besides heterosexual per a Gallup Axios poll. It's interesting. I don't understand why Unusual Whales is covering it, but it's interesting. You know what I would like to see for polling for that? Is I would like to see if there's a poll that could suss out a difference between how people identify with their sexual orientation versus the lifestyle that they're actually living. Like you ask, okay, are you gay? And then or bisexual, for instance. They say that they're bisexual. Okay, are you currently living in a bisexual relationship, which would mean like you have a relationship and you live together, right? I would bet that there would be especially among the younger kids, I think that there would be a divergence, but I don't know. Like the thing that I think would be so from us, like an economic perspective, right? I think that the things that would be more useful for us would be to look at like how people are actually living and the changes in household structure right? Because that really has significant economic impacts, you know. Like the big thing that's going on right now that I can see is that less families stay together. And when you divorce, well, it's rough on both sides, but particularly women. And that's why I think you're seeing a lot of the voting and so forth go the way that it is, because women are concerned that, you know, they will get into a relationship, put everything into that relationship, and then get left high and dry, right? And so those are the sorts of things that are going on. So, like, if there is a shift more towards, you know, like, let's say non-traditional relationships that could have interesting demographic consequences down the line. But I am not convinced that the changes that you're seeing in how people identify sexually are actually carrying through into a change in the structure of households. I think I was able to say that really with really technical language. Kind of treading on difficult ground here, right? Okay, you know what? I gotta fix this. I feel like the camera is a little bit too low. That's a little bit better. If I'm not leaning back in my chair, it's okay. Cool. Oh yes, I should pull up that meeting over here. Oh wow, I actually now I have scrolled down a little bit and it showed me the actual graph, and for Gen Z it's actually 22% identifies LGBTQ+. Obvious social contagion is obvious. Maybe. Like that would imply that like in 10 years it would go away, but I'm not convinced that in 10 years it will go away, right? That wouldn't mean that it's not a social contagion, but the power of TikTok. I don't think it has anything to do with TikTok. But I don't get that sort of stuff on my feed, so maybe I just not seeing it because of that. we had that initial kind of like slip lower, but it was only like a tiny slip. Could be way more to go if they keep pushing, I guess. No, I'm not arguing that, people are born with it or anything. I'm kind of think that if it's a social contagion that has started long before TikTok. Like, this is something that I've been seeing since probably 2012. Like Tumblr is the first place where I notice this sort of stuff happening. Yeah. Well, now we're getting data because now you're getting a generation of people that have grown up completely after that. I want to argue this a little bit, well, not argue, but discuss this a little bit more with you, Uzi, but I'm listening to something at the moment. My opinion is that I think that both the social contagion and the immutable characteristic theories of this are inadequate to explain what's going on. That's my opinion. More beard means more alpha. It's a little bit of acceleration in volume there, but the market volume is actually turning to the long side. Oh, I have no clue what you're talking about. You don't have to know. That's some sort of new tropic. Hmm. It's a little unusual to see two distribution zones this close. I'm very suspicious of this area. Because it kind of looks like they were absorbing here. They weren't getting enough volume, so they let it fall, and then they started absorbing here. I'm a little suspicious of it. Especially now that I'm seeing some of the market volume in the 10-year turn long. I probably was hard to hear. To say I'm especially concerned that I'm seeing the cumulative delta rise in the 10-year here. News Squawk just said something about a repo operation. Which matter are we talking about? Day Trader Paradise? Oh, trades by Matt. Eh, it's going to be really common to see people trading in that way to make like really large sums of money and then blow it all. Has he really made two 40K payouts? That's amazing. That's way better than I've ever seen him do. But there is a really fat-tailed nature to what he's doing that is a little bit like sus. Like, I guess the thing that I would say to people that I want people that are watching that to understand is that that does not necessarily mean that there's edge in any of the technical analysis sort of stuff that he's doing. It largely has to do with taking on a lot of risk, right? And that's why there's this tendency to like lose it all at once, right? Like he's blown accounts many times, right? That's just like the nature of that strategy. He's always making back his losses off stream. I've heard people say that, but how can I know? You know, when he changed things so that like the streams no longer get listed after the fact, because he hired like an editor. So he has an editor come in and edit the stream instead of leaving the full live stream up. You, of course, can still see the live stream if you save the URL when you're like watching it. But when he changed that, I really lost interest in what they were doing, you know? Bolo FX or tie you to read order books. Are you missing a... I don't understand what you're in response to, or if you had a previous comment before that that I missed or something. If I'm confused by that message. You know, the order book is a really useful tool that I think is something that you have to watch in order to understand what's going on in the market. But I would be suspicious of anybody on the internet teaching specific setups. Trades by Matt is not a safe way of trading. Yeah, he's definitely doing risk taking, right? Like, this is a thing that just drives me crazy. It drives me nuts, guys. Stop confusing risk-taking, making money from risk-taking with that means that this technical pattern works. That's what everybody does, right? Ah, well, this guy, he teaches price action and he's made two $40,000 payouts. That must mean that price action works. No, it doesn't. It just means that he's a degenerate gambler and that you can get away with it for a while, right? Like, what proves that like a price action setup works? Empirical evidence. That's what bothers me about it, because, you know, Matt seems like a nice guy. Good for him if he's made money from it. Good for him if his YouTube channel has done well. I'm not going to do things the same way. What bothers me is when people make these conclusions about what the market actually does and doesn't do from watching somebody or saying this person made money from it instead of looking at the empirical evidence. Nope. Have zero interest in any of these funded trader programs that people talk about. Like, so here with Matt, you say that he's had two 40K payouts to me. That is stupid. Why would you you'd get paid $40,000? Why would you continue to use them? Why would you not take that, put it in your own personal account, and just trade that from there on out? Makes no sense to me at all. Yeah, that's when they just need to listen to you explain some tells and how the higher risk is how the success of many of them works. Yeah, but that's the thing, Paul, is I don't really feel like I do a very good job with it. Not that I don't think that my explanation makes sense and all of that, but it just doesn't seem to be very convincing to people. I don't know what the deal is, but I kind of let myself off the hook by saying, well, it's just kind of people's natural inclination, but it just seems to be really, really hard to get the retail trading community understand the whole fat-tailed thing and how you can make a lot of money in the short term, but overall have still a losing strategy. And why you see so many of these people that seem to have a lot of success and then completely blow the account. Tell us about the time you used to work in the bank. Is it true that you used to switch on and off algos? So I personally would not switch on and off algos, but what would happen is the systems that we maintained would identify certain clients that seemed to be doing something that shouldn't be happening, and it would shut them off. And there were situations where, like, we would have to override those or vice versa. So, because we were like the risk controls, right? So our systems were all about trying to detect things that weren't supposed to be happening and preventing the people from trading when they happen. Which meant most of the time that they were false positives, right? Which broker do you use? I use EdgeClear right now. On ES reversal area, what do you think about 5302, 5290? Well, that's an awfully close range, man. That's only 5 points. I'm really interested to see what the E-mini does here when we open up, right? Because, you know, we're already up another 20 points here. Is like, geez. Oh, it's not another. It's another 5 points. Another 5 to 10 points. Like, the stock market is just going nuts, oh man. I bet you we'll check it here in like 30 minutes, but I'm gonna bet you that a lot of the meme stocks are gonna be doing well today. When I worked for the bank, the more interesting part of what that team did was keeping clients within their credit limits / looking for rogue traders, because that allowed me to see like the net credit limit of every customer basically. And it was just wild to see how many big funds there were. Names that I've never heard of outside of that context, you know. How can you? So, for that, the best way would be to go into Discord and just message me on Discord. So in the video description, there's a Discord server, and you'll see me there, just the admin of the server. Sometimes I don't notice the messages because Discord kind of hides message requests now, but I try to answer every question that's sent to me. But key thing, like, send me the message. Don't like say, you know, first message, hi, just like ask your question right away, right? And I don't charge people for that. I'm like always available to talk and answer questions on Discord. Don't really have any interest in doing like a mentoring program right now. I think that I probably could do that. Probably could be a pretty good business. And I think that I'd be pretty good at it just because I have so much experience with working with so many different traders on this stream, and all of that. It's just, I don't feel that at the current time that I could dedicate enough time and energy to that sort of a thing to really make it a product and a service that I could be proud of providing. So, you know, I continue to just, as I have the time, answering the messages and stuff, I think is the appropriate thing to do. I've been pretty busy with the day job lately, you know, because we're dealing with production critical issues all the time, and you know, yeah, my last job was a lot more tame, which is good. I enjoy it. So there's the 16. There does appear to be something at 16. So we were down like 7 basis points from yesterday, and now we've clawed back, I'd say, 3 of them. Very difficult for me to judge how strong this flow is going to be. Brian Gardner, good morning. That's a new name. Welcome. Oh, I missed the question. Mr. Legit asked, do you use the tape on Jigsaw? So if you minimize my camera, there are some windows behind the picture that you can't see. Just because, you know, we don't have the space. But, you know, I kind of only just watch those out of the corner of my eye, but I do have a reconstructed tape up and watch it. Oh, here's an interesting thing on Twitter. Top U.S. asset manager Vanguard does not believe the Fed will cut interest rates this year, reports CNBC. Sycamore Tree Capital Partners' Mark Okada told CNBC last week that there's a good chance the Fed doesn't cut in 2024, as did Torsten Slok from Apollo. Well, that's interesting that now all of these guys are saying that, because that's kind of what I've always felt, is like, I didn't understand why we're even talking about 3, but... By the way, I want to apologize again for not being super chatty today. It's just I've got a couple of other things going on in the background that I'm paying attention to. Kind of bummed that I missed this move, but Octavia says I agree the numbers don't support it. Well, I'm not going to say that the numbers don't support it, because I don't think that we've gotten the numbers that would really matter yet, right? But it does seem to me like the market has kind of all made this conclusion before we really know, you know? Like it doesn't make sense to me that the S&P 500 is taken off on lower interest rates before we really have the data that would tell us that lower interest rates is appropriate. Like the overall pricing, 3 rate cuts, that makes sense, but like the probability doesn't make sense. Like that everybody has decided that that's okay is kind of a little weird to me. But I kind of think that things like performance chasing and not wanting to be left behind on the S&P 500 is probably a significant part of that. So that's why it's so interesting to me that you're seeing some pretty large fund managers now coming out and saying that is really, really weird. And it's interesting that as we get that story that you're seeing the Treasury sell. Or the Treasury selling before that. Well, it's also curious to me that the Treasuries are selling here and giving back some of those gains. But the S&P 500 doesn't care at all. They're just continuing to rally. getting Bank of Canada comments. Oh, do we have PMIs? Oh, we do. You know, I didn't really go through all of my stuff this morning. I'm kind of slacking. Okay. Did an online assessment for a teller position? That would be good. They're polling for the news now. Okay, so manufacturing PMI was 52.5 versus 51.8, and services was 51.7 versus 52. So manufacturing stronger than expected and services weaker than expected. That's curious. But the market appears to be reacting positively to it. Let's not say better, stronger than expected. So we get some housing numbers at the top of the hour. The music comes from streambeats.com. The, what is it? 100 Thieves hype tracks. So there was a little bit of buying, but they came back to 16 very quickly. And overall, I'm seeing net selling. Really, that was really strong. Oh, it's too late. I really wish I'd sold at 15.5. Since my attention is split, I don't really think that I should take a live trade, but I could take a sim trade there, but I think it's too late. It's too late. Holy crap. Holy crap.
Block sell.
Hi, cutie. Oh, thanks. Dude, this sell is a little crazy. That's 8 ticks just like that out of nowhere. This is very interesting. Are we getting into some of yesterday's prices now? We're not quite there, but we're getting close. We're actually not even below the overnight lows. So 12, let's say 12. Well, it was really 12.5, but 12 was an overnight low, and they're just thumping through that. It kind of looks like there's even more to come. Well, I'll try. So selling still there, but maybe a little bit of a liquidity hole here. So I'm a little bit nervous now about this sim trade. Octavia says with the sell-off, well, I'd say it's more than a meta order at this point, right? Like that's a very, very aggressive seller. So I'm starting to look at this. Vanguard doesn't believe the Fed will cut interest rates this year from CNBC. I'm kind of wondering if that's one that, like, when that hit, like, nobody really paid attention to it. But as it goes along, more and more people realize, more and more people are getting on board, and that's why you're all of a sudden you're starting to see, like, really, really impulsive selling. I call it impulsive selling because, like, they are just grabbing everything that's available, like panicking. But I definitely picked a little bit of a reversal spot. I was kind of worried about it happening, and it definitely played out that way. I'd say that the liquidity looks okay. It's just I'm not getting quite the same degree of selling. That looks a little better. Let's see, like, I haven't been filled yet. It kind of seems like they're having to coax the sell orders out now. Oh, I got one fill. Seems like the market engineer, it doesn't work that way. Market maker engines teasing new territory. I'm curious to see if this move in the treasuries is going to start to weigh on the equities now. That's kind of what I'd be looking for. So you buy the data from a data provider, not from Jigsaw. I am using Rhythmic for my data, and it's about like $30 a month. So I am seeing a little bit of loose movement in here, so that maybe does suggest that we are in a liquidity hole and that the liquidity is kind of getting light in this area. Nearly 1 in 10 say they trust TikTok more than parents, colleagues, and career advice. Yeah, probably. Unicorn Ted made career-based decisions based on the app. 1 in 10 quit their jobs based on advice. 70% encounter career advice on IT. I think that TikTok has kind of replaced social groups. You know, like normally you would pay attention to what your friends and other kids at school are saying, and now TikTok has replaced that. How do you sign up for that? So you would get that stuff through your broker. So like say you want to use Jigsaw. First you purchase the platform, then you're going to go and find your broker. Like I use EdgeClear, and then your broker is going to get you set up with the other things like the data and so forth. Like when I pay for the data, it comes out of the trading account. Oh yeah, I don't know if well, I'm just kind of trying to think about like when it comes to career advice, for instance, like is somebody pushing a narrative in a way that would be negative for people in terms of career advice? I don't know, but at the same time, when I look at TikTok and a lot of the things that I see people say about careers, I don't feel like it's very good information. But I don't think that information is any better or worse than what they would normally be getting from their peers. Maybe in some respects it is better than what they would be getting from their peers in high school, at least. Yes, so if you're using NinjaTrader, then you're going to use NinjaTrader to get your data. They have something called Continuum is probably what you end up using. So to use that, you'd have a slightly different setup than me. You would want to be doing like you'd use NinjaTrader to connect to the data, and then there's a data pipe that will push that information to Jigsaw through the bridge, essentially. So if you're using NinjaTrader, that's how you do it. And in fact, when you install Jigsaw, it installs a plugin into NinjaTrader for that bridge. Whoa. Okay, so there's the housing numbers. Stronger than expected. 9.5 versus negative 1.25. Let's come in here. Sorry, guys. I have to talk to somebody else. It's a weird meeting that usually doesn't happen, so you might see me talking and not hear it for a bit. Wow, I looked away for just a second and they just bush. That was wow. That selling is still there, awfully strong, man. I think it may have to do with these PMIs. I'm listening to another meeting at the moment. That's why I'm not so chatty. But it should be done in a moment, though. I apologize. I'm talking to somebody else here for a second. Unusual day today. Man, okay, so it was got into a big long conversation with people. Lots of interesting things going on, but this is continuing to sell. I took a pretty decent amount of profits on the initial, so this does look like it could go a little bit further, so I think I'm gonna leave this on and maybe see if it lasts until the end of the session, if not tomorrow. But it looks like, I think it was a combination of a couple of things, but those PMIs, they really didn't like them. And Mask, you have a good question, but you have to ask me tomorrow. But anyways, I will see you guys tomorrow. Stay excellent.